Joining us now to show us some deals to be had is Scott O'Neill, Managing Director of Rethink Investing. Scott, great to have you with us once again.
Thanks for having me.
What made you sort of look at commercial investing?
Initially it was the cash flow. So like everyone else, I started in residential and I started hitting walls with the amount of cash flow. It was, as you increase your debt, it wasn't really worth taking on that debt when I was only getting a 4 or 5% yield. But commercial was double that. In fact, we were getting 7, 8, 9% net returns. And that just made it easier for, I like the fact that I can invest without it kind of closing up your lifestyle. It's like creating a separate business. It's going to give you money back each month. And commercial investment is also, there's this interesting stat out that there's 40 times more buyers in residential. So just going into that space, you're up against a whole lot less competition. For me, I like that. I don't want to follow the crowd the whole time, and there's a bit more, tricks to it to get it right. But for me, the payoff was the cash flow, and even more so now that the markets are flat or going backwards in Sydney or Melbourne, it's perfect time for commercial real estate.
So in 2018, did you see a change in the market like we saw in residential and commercial?
Yeah, big time. So my business is residential and commercial,
right.
But we've done a U-turn. The demand for commercial is going through the roof, and I think it's two things. Number one is the Sydney and Melbourne markets are falling behind. They're dropping quickly at the moment. So people aren't assuming that capital growth is going to be there forever. So that's pushing more people to think about other investment classes like shares, and the share market's not looking too good. So what do we got left? And commercial is an interesting space where you can get that cash flow, and the growth is sort of unrelated to the residential markets too. So that's pushed a lot more people there. And finance is the other big one. APRA has destroyed investment lending in Australia. However, they're leaving the commercial side, alone, to be honest. And even my personal situation, I'm tapped out with residential loans. Commercial, I can keep going. So they consider the cash flow and the investment, and they have, it's a little bit more favourable in terms of finance as well. So that's pushing more people here.
I actually applied for finance myself just recently, and my banker actually said, just go down the commercial finance route. It's so much quicker. You'll have the money in your account in a couple of days as opposed to 3 months going down the residential path. What do you see are the main challenges for investors investing in commercial in 2019?
Extra competition, definitely. I'm working much harder to get the same result, and as I said, it's all the extra, mum and dads. Also, cashed up investors are now accepting lower yields, which is yield compression, which is capital growth, because people pay more for the same rent. So it's harder to get a good deal. So you've got to work, you can keep going further and further out from the cities, but you've got to be careful doing that as well. So there's some of the challenges I've seen. Also, people have, there's less equity around because the Sydney and Melbourne markets have dropped so significantly. There's the people that had 300, 400 grand equity just sitting in their houses, that's been halved. So there's less money going around, and that means there might be less investors. But to be honest, with all the extra competition, I think it's a good thing. It might just do a bit of a balancing out.
Do you favour one particular segment in commercial, or are you spreading your wings all over?
A few, actually. So I like medical, so your dentists, doctor surgeries. I like retail, like multi-retail stuff. So it might be anchored by, like a Woolworths, and then you've got your Chemist Warehouse, all those things around it. And also storage, so small warehouses. So import-exports in New South Wales have grown by 10.8% in the last 12 months. In Queensland, 12.3%. So that means there's more people not manufacturing in Australia, importing, storing, and these little storage places are in massive demand. Seen it in Western Sydney. That's been one of the best performing markets in Australia over the last 5 years. So it's not just plumbers putting all their gear in a small warehouse. It might be like a protein supplement store where they've got 5 little retail shops around, and all of a sudden they need to store stuff off-site. It's cheaper to do in a warehouse. They take long leases up. There's no maintenance on them. I'm personally going to buy one in my super fund just because I can forget it. It's easily to find a new tenant, and 3 walls and a roof and a garage door, there's not much to worry about.
I actually bought my very first commercial property last year and I've done really well on it, so it was a bit of a surprise deal. So I'm particularly interested in commercial property right now as well.
He's smiling that you're doing that, but he's not really happy.
It's not competition.
What do you think was the biggest sort of lessons that you've learnt this year? I mean, it's interesting that you know this market, and now these residential people, I suppose, are pouring into your market. What have you learnt, and what do you think, they've got some lessons to learn as well to understand this market?
So things like you've got to triple check square metre rates on the investment, not just on the purchase price, but the rent. So this goes both ways in terms of you don't want to pay too much, but if you check the square metre rate on the rent and it's 30% below market value, that's a value add opportunity. All you need to do is over time get those rents to where they should be, and you've just made 30% on your investment without picking up a shovel. So square metre rates is the first thing you look at. Make sure if you're buying in a centre, make sure it's got real good foot traffic. So things like your supermarkets are vital. Doctor surgeries. There's a constant flow of people, bottle-os. You wouldn't want to go buy into a place where it's an accountant, a lawyer, an Indian restaurant. There's just not much foot traffic coming through those. So the whole viability of that centre, it's going to struggle over time potentially. So, go to the site, check it out, have a walk around, see what it's like. Talk to the business owners. Like I always go and have a chat to the person behind the bar, see what they say, because they're not selling a property. They're on the defence. They don't know what to say when you ask those questions. So the truth generally comes out, and you'll know if business is slow. So they're sort of a few things to look at.
And you had there as one of the myths that people think they have to go into residential first. You can make your first investment into commercial?
Yeah, so especially because I'm from Sydney, so many people my age have been priced out. Instead of paying $1 million for a 2-bedroom unit in the eastern suburbs, which means you're finished with investing because that debt is huge. Unless you're on a massive income, even then so it's hard to pay that off. You're not really going to get onto property number 2. But you can go you can buy a good commercial property for 200, 250 grand. It's going to be highly positively geared, which means it's good from the bank's perspective. That means number 2 loan will come easier. And also the capital growth can still be there. Like if you buy like I mentioned, buy an under market rent property, or, in a market where, it's increasing like all of, well-placed commercial at the moment, your equity will be there as well. So it's not just a cash flow play, you're creating equity for property number 2. So maybe you buy that family home a property or 2 down the track instead of first out and then you're finished.
Right, you've got some good deals to tell us about. The Ipswich CBD, this is west of Brisbane. What did you spot here?
So this is just a small cafe, but I really like this one because it was freestanding. It's 100 metres from the train station, one of the largest in Queensland. It's renting for $33,000 a year, and it's got 10 car spots out the back, which the property owns, which all can be individually rented. 4 of them have been rented by this client, and it's got a DA to go up 42 metres as well.
You can see on either side of it, can't you?
Yeah.
Up 42 metres, wow.
So you bought the airspace, so to speak.
Yeah, and got no idea what they'll do with it at this stage because that's a big job, but the potential's there, even if you get a DA on it, and you're probably a better person to talk to about that.
So how much was that one?
That one was, what was it, 440.
Wow.
Wow.
It's really affordable for most people.
Yeah, and you can have a coffee while you're waiting what to do with it, can't you? And open the car park out the back. That's pretty impressive. What about the property you've got in North Lakes in Brisbane?
Yeah, so that's a good example of a cheap deal where it's one of those warehouses I mentioned. So we got that one offline. So one of the tips that I was going to mention was we really got to network hard with the agents because it's so competitive. There's not many good listings in this space. We got that offline because I bought a couple in this complex prior, and this one had a 1-year lease on it, which is not favourable. I like 3, 5, 10-year leases. But this tenant's been there for 8 years, and I begged the agent, go, look, let me have a go at it. We want to buy it even with that short lease because we're confident. And we ended up getting it about 60,000 below what the other ones are selling for. So, we paid $267 for that. Most stuff around there is selling for 330 to 350.
Why was that?
Because they've got good long leases on it.
Right.
And also owner-occupiers in this area pay more for vacant properties. So, because they're, the plumber, they don't want to pay rent forever. If they've got the capital, they tend to pay more. So, another good thing about the warehouses is you're not just selling to investors. You've potentially got the occupier market as well. So that will be a capital growth play as much as it is a cash flow.
Now the ACT, you've also put some feelers out there.
Yeah, so we did a shopping centre there, so 10 shops. I really like this one. It's an 8.8% net return. It was getting $570,000 a year rent. It's all tenanted, all good businesses. It's quite new. The depreciation is about $80,000 to $90,000 a year on it, and there's a real opportunity to strata title it. So if we strata title it and sell at 7% net returns for each individual shop, which is more than fair in this market, you're going to make 25% on the property. So this property was worth 6.45 mil. So 25% of that, you're looking at 1.6 million profit. And the strata tiling costs are almost non-existent because it's all fire-proof walls. It's all there. Every single shop has a grease trap in it as well, so you could sell it to mixed use. So, 25% return. Some of the rents are underdone as well. I couldn't find a deal that good in residential. But they do it. They're hard to find, but because you're up against less buyers, they tend to pop up.
Scott, when we had you on the show before, you just seemed so calm and low key, and you're rolling off these figures and these interest rates. It's quite amazing. For people watching at home now, what sort of final bit of advice can you give for people who are thinking about starting their real estate journey and getting into commercial?
Think of it like a business. You're setting up something that wants to pay you money back. Why go out, especially in a falling market, just because it's a long-term investment? Go out and make money next month. And if you use professionals like buyer's agents who do this every day, it takes that risk out, because we're not going to make you buy a blockbuster in Port Macquarie. We're going to be buying well-placed food, medical, storage-related industries, and you can get that cash flow. The barrier to entry is not as high as people think. So, I got my loans with ING at 25% deposits for commercial, 4.6% interest rates. It's not that different from residential. So, you just open your mind to it. Definitely down the track, you need it in retirement, I think. You can't, it's very hard unless you take on a very large amount of debt to build an income out of residential until things get better with rents.
And it's good to diversify your portfolio as well. A bit of residential, a bit of commercial, spread it around.
Yeah.
Absolutely.
So easy, isn't it? Thank you very much, Scott O'Neill, Rethink Investing. Always great to have you on the show. Happy New Year, mate, and we look forward to seeing you in 2019 to share your knowledge and say it in such a calm way.
Thanks for having me, guys.
Thanks so much.
Appreciate it.